Today I'm recording two videos. I'm doing these separately, but they're related. I'm doing them separately because one is going to be backward looking and the other is going to be forward looking. So first, I want to do the market update for December 2020, looking at the data for November of 2020, comparing that with how we did the prior month as well as the year past. I want to do that as I do every month with the market updates. But because we are now into December of 2020, I also want to give you my projections for the year 2021. Every year I try to do an annual forecasting video, and I want to do that. These are inherently related, but I don't want any of you, because they're going to be a bit long, I don't want any of you to feel like you've watched a few minutes of what went on and so you avoid watching what will go on, or vice versa. So I urge you to watch both of these. They're both really important content, but again, one will be backward looking and one will be forward looking. So let's launch right into the first video that I'm recording today, and that is the regular monthly market update. This is for December 2020, resale single-family homes in the Las Vegas Valley. Now, before I launch into what the data are, I do want to remind you that if you had watched the previous month's market update video, I had noted that I had temporarily lost access to a preferred data set. And so I was looking at, in that video, not simply resales, but rather all of the MLS data, all the multiple listing service data for single-family homes in the Las Vegas Valley. And that skewed the numbers somewhat, and I'll report to you today what that skewing resulted to and how it happens and why I prefer to use this data set. Even though it's different than what a lot of other people are talking about, this data set's more refined and looks only at resale single-family homes. All right, so let's dive right in. In November of 2020, the median sales price for resale single-family homes in the Las Vegas Valley was $342,850. Now that's data that's current as of today, Saturday, December 5th. There could be a couple days of additional data massaging that changes that to 343 or to 342,500, but it's going to come out very much in line with this. $342,850 median sales price. How does that compare to October 2020? We're up 1.2% from $338,500. And we're up 13.2% from $303,000 in November of 2019. 13.2% year over year. Now, I commented about last month's data set. Last month when I reported to you, because I was looking at the full MLS data set on resales, or rather on single-family homes, the number that I'd reported for price was not $338,500, rather it was $340,000. So why did that happen? It's because every developer puts some number, but it's a near random number, of builder homes into the MLS. These are homes that builders are building not under contract for individuals, but rather they're building as inventory homes. So if somebody comes into the development and wants to buy a new home, but cannot wait 6 to 12 months to get that home built, there's something there that they can buy. Some developers report all of those inventory homes. Some developers report only some of those inventory homes. So it's a nearly random number. In October 2020, the median sales price for new construction single-family homes was $415,000. That number being significantly higher than the median for resale homes skews a little bit, not a whole lot, but a little bit, the information. And so what was reported in the November update was 340,000 with the caveat that it was going to be not correct. The actually corrected number for resale single-family homes was $338,500, so $1,500 less than what I had had the data to report to you last month. We'll look at the number of units as well, and we'll see how big this issue actually is. All right, so prices up marginally month over month, up 13.2% year over year. What about closed sales? Contracts that have gone all the way through and closed, and ownership has changed from seller to buyer. In November 2020, that number was 2,882 closed sales. That is down a little bit. It's down actually 5.3% from October 2020, when the number was 3,044. Now, I had commented last month that it was likely we were going to see some drop off for November just because inventory was so astoundingly tight, and we start to run into seasonal issues, as well as we were running into the election. And the election likely was going to slow things down while people were concentrating on being able to vote, figuring out how they were going to vote, and engaged in watching what was going on with the outcome of the election. So that did, in fact, result in about a 5.3% drop in total number of sales month over month. However, November 2020 was still a very strong month. We were up 26.4% from November 2019, right? No one had heard of a pandemic at that time. Almost nobody had heard of the coronavirus at that time. We were up from 2,280 resale single-family homes in the Las Vegas Valley, November 19 to November 20, an increase of 26.4%. Now, again, looking at the data that I had presented last month, it becomes clear here the size of the issue that arises by looking across these two different data sets. There were originally reported last month in the November update 3,231 home sales. That number actually was 3,044 when we take out those developer sales and we look only at resale single-family homes. So that's an adjustment of 187 homes. So because there were 187 extra homes in that data set, and because that 187 had a median sales price of $415,000, it skewed us up $1,500 in what looked like the median sales price. So we've got the corrected numbers that we're presenting this month. Okay, so prices up 13.2% year over year. Sales we're up 26.4% from the November 2019 reporting period, and we're down 5.3% from the October 2020 reporting period. Well, what about inventory? I mentioned the inventory is really tight. Certainly, if you look across the video series over the entire previous year, inventory has been really tight. Well, months supply is one of the ways we look at inventory. There were 1.7 months worth of supply at the end of November 2020. That compares to 2.1 months worth of supply, or down 19% from October 2020, and we're down 47% from the 3.2 months worth of supply at the end of November 2019. And by the way, that number is interesting because at 1.7 months worth of supply, so again, this is in the right database, that's the lowest in that database going all the way back to the beginning of this data set in 2006. We've never had a supply situation this constrained, 1.7 months worth of inventory. Now, the other way we can measure inventory is we can look at the number of homes that are actually for sale. And so looking at the number of single-family resale homes for sale in the Valley, we ended November 2020 with 4,350 homes for sale. This is down 19.5% from the 5,403 homes that were for sale at the end of October, and it is down 46.9% from the 8,796 homes that were for sale at the end of November 2019. So this is confirmatory between number of sales, number of units for sale, as well as the month's worth of supply. Inventory is astoundingly tight. That number, by the way, number of actual units that are for sale, 4,350. That's the smallest number of units for sale in the Las Vegas Valley going back to December 2007. And remember, the Valley was considerably smaller 13 years ago. So there's a couple of other data points that I've been looking at over the past few months. And so let's just quickly run through those. One of those is price per foot. It's a quick, easy way to figure out whether a house is priced high or low relative to the median in the marketplace. There's reasons to price high. If you've got a high quality home, you've got lots of nice finishes, you're in a really nice area, there's reasons to price low as well. But the median still tells us what the middle of the market is. And so it's a quick, dirty way to look and figure out how an individual house compares to other things in the marketplace. So the November 2020 number, $182 per foot. That's actually up 0.5% from $181 per month in October 2020. And it's up 8.3% from the $168 per month in November of 2019. So we're still seeing prices escalate. I want to go back to the pricing information that I said at the beginning of this video, and that is the median sales price, $342,850. That, in combination with the price per foot, there are likely some people who will watch this video, some people who want to be heard talking about affordability, and others who will be concerned, well, aren't prices getting too high? Aren't they getting ahead of what people can actually afford? And so I want to put this in a little bit of context. In June of 2006, Las Vegas Valley prices hit their zenith, the highest that they had been to that point in history. And that number was $314,700. Now we're clearly above that number, right? We're almost $30,000 higher than that number. But remember, these are nominal dollars, meaning dollars that you would think of at the point in time that you actually have the dollars in your pocket or you're spending them. But there's inflation. And so we can inflate the 2006 numbers to current. And what that tells us is actually in June of 2006, when the Valley had hit its prior zenith for pricing, its prior high point for pricing, that number was actually the equivalent today of $411,054. So here we are with pricing today at $342,850. We're actually $68,000 less than what we were in June of 2006 on a comparable dollar figure. So yes, price per foot has gone up. Yes, we're actually at the highest nominal dollar figure for single family homes at a median in Las Vegas ever. But in reality, adjusted for inflation, we're still $68,000 less, which is actually about 20% less than what prices were in 2006. Okay, something else that we've been looking at recently, pending home sales. These are the number of contracts that existed on houses at the end of the month. So these had not cleared at the end of November or by the end of November 2020, but rather these were contracts that would presumably clear at some point in time, either completing the transaction or falling out of the transaction. The number 3,011 at the end of November 2020. This is down slightly. It's down 3.6% from 3,122 at the end of October 2020. And again, remember, I'd said that we're going to see a drop-off in sales because of seasonality, because of the election, because of the stuff that normally would be going on at this time in the market, as well as the incredibly tight inventory. And so we see a drop-off in not just the number of closed sales, but also the number of pending sales. But again, like with closed sales, we're actually up 34.2% from the 2,244 pending sales that existed at the end of November 2019. So November 2020 was actually a very strong month. If we look at across Novembers, November 2020 was a very strong November. Now, a couple of other things. New listings into the market. We like to see new inventory come into the resale market because that means there's new houses that can be sold, new listings that can be sold. If we don't have those, the inventory numbers get smaller and smaller until they get to zero. So we need replacement inventory. This also indicates that people are looking to move. They may be moving to better houses, to smaller houses to reduce their mortgage. They may be looking to move out of the area, but we need people moving in order to be able to get new people coming in and in order to get home sales. So new listings in November of 2020, 2,676. This is down substantially from October 2020. New listings that month were 3,446, so we're down by 24.5%. This is, though, kind of seasonally expected. November, December, January, we tend to get the lowest number of new listings in the marketplace. New listings is actually up marginally, about 5.5% from the 2,536 that we had in November of 2019. So this is very much in line with normal market. And then one other data element that I've mentioned once before, I'll just mention it real quickly because it's interesting. It's sort of the aggregate number of total units and the price of those units. During all of 2019, the Valley saw $10.67 billion worth of residential property transactions. During the 12 months from November 2019 through November 2020, that number, that comparable number, total valuation of all of the units that were sold, $11.45 billion. So we're actually up 7.3% year to date in the total size of the market. Now, total number of units is not exceeding very much from what we looked at last year. But prices are higher, and so the total valuation is actually coming in 7% higher, or about $800 million higher in total market this year to date. So that's the information for residential resale single-family homes in the Las Vegas Valley for November 2020. What does this suggest for the month or two sitting in front of us to wrap this up? One, if you're a seller, there's surprisingly little competition out there for you right now. There are not necessarily lots of people looking to buy at this time of year, but the people who are looking tend to be more serious buyers. And if you're willing to sell at this time of year, there are buyers out there and they are picking up homes. Interest rates are low. They're able to get a lot for their money. And so if you're a seller and you need to be selling now, or you want to be selling now, it's a great time to sell. If you're a buyer, know this: inventory is really tight. A lot of properties are going into contract very quickly, especially if you're anywhere near the medium price point. We still see multiple offers on some price points across the valley. So you need to be represented by somebody who's used to dealing with multiple offer situations. As well, if you have time to wait, you could maybe productively wait. Prices are going higher, but the selection that you have available to look at may also increase as we go through not December, but through the next couple of months after that. I do want to caution you, there are a couple of issues that are taking place in the market right now that are a little bit negative, or maybe substantially negative, depending on your perspective. One is there are some agents and buyers out there who are putting offers on multiple homes and effectively pulling those homes out of the marketplace while they decide what they're going to do. This is actually not proper behavior, but there are some people who are doing it, and it means that we're seeing properties go into contract and then fall back out and come back into the marketplace. It's one of the reasons why we're having higher pending home sales than what we actually have for closed home sales. And so if you're a seller, you want to make sure that your listing agent understands what's going on and tries to protect you from that. If you're a buyer, it's possible something that you wanted that went into contract might come back into the market. I wouldn't count on it. It's certainly not the majority of houses, but this is something that's taking place in the market. The other somewhat negative thing is we're still seeing pricing resistance from appraisers. And so we're still seeing appraisals come in low more frequently than typical. It's not every appraisal by any means, but it's a larger percentage of appraisals that are coming in low. And it's a really unfortunate thing because it doesn't really protect anyone. It protects banks from a very small degree of risk, but it causes some transactions to fall out because sellers can't go down sufficiently or buyers aren't willing to pay over appraised value, even when the appraisals are wrong. So therefore, on either side of the market, buyer or seller, make sure you're represented. Here at the Chong Miller Group, we represent buyers and sellers. We help people buy and sell homes. We would love to be your trusted real estate advisor and help you through the process. Please give us a call. The number and email are here on the bottom of the screen. Remember, if you're watching this on YouTube, please hit the subscribe button. Please hit the like button. And any questions you've got, please let us know. We'd be happy to talk with you. I'm Justin Miller. Thank you. Look forward to talking with you soon.